What's up, everyone? It's Caddy with Money Investing. Welcome on board for another live stream here. Today is the big day. If you guys can hear me and see me, just give me a thumbs up. I just want to make sure that the audio and the video is working well. And yeah, welcome on board, everybody. I said I was going to try my best to live stream it, and that is still the case. I'm still going to do an hour and a half live stream right now, pre-market going into the open, and then when the Fed starts talking, before the report, I mean, we'll be live to cover that report when that's released, see the market's reaction, and then of course talk a little bit about what Jerome Powell is going to be speaking. There's a poll going on right now, whether you think Jerome Powell is going to be hawkish or dovish today during the Q&A and of course during the press conference as well. So once again, thank you so much for joining. I really appreciate it. Make sure that you drop a like and of course subscribe to the channel if you haven't already. Dan is asking how San Siro. I haven't been yet. I literally just got to Turin about a few hours ago, so just checked into the hotel. I'm still starving right now. I haven't had anything to eat, but we'll probably do that. Probably do that later after the live stream. So here, just give me 1 second. All right, here we go. And yeah, make sure that you do vote as well if you haven't already. We are all set, ready to go. I'm going to go over some expectations from what the market's also pricing in. And what that's going to look like from the Federal Reserve standpoint. AMD is up over 5%, so back over $63. Did a video on AMD earlier today, so make sure that you do check that out if you haven't already. QQQ is slightly higher, just more or less flat because this is the big calm before the storm, big anticipation from the markets here. Right now, 6 basis points for the NASDAQ. SPY is slightly down, and the Dow Jones also flat, right? All 3 indices are flat. The yields are just at 4%. Everything's kind of like just set up for just insane moves after the Federal Reserve comes out and starts talking. So CVS is going to be reporting pre-bell. Roku is after the bell. Qualcomm is after the bell. Marathon Oil, Robinhood, Etsy, and Fortinet is also after the bell. And you know what's interesting? It's crazy because the hotel that I'm in Turin, I got literally just checked into my hotel, right? And I was so tired from all the traveling that I just went over to the bed and I just like laid down. I laid down, I opened my eyes, and at the very top, there's this, there's the Wi-Fi thing, the router, and on it says Fortinet, right? It's pretty crazy. Like I was gonna send that over to our Discord, but it's pretty wild. Let me see if I can find it. I don't have that right now, but it literally says Fortinet, and I was like, is that a sign, or maybe something like that? But yeah, they are going to be reporting after the bell. Then of course tomorrow we've got PayPal, Coinbase, Block, Mercado Libre, Twilio, Starbucks, Datadog, Peloton. All these companies are coming up later this week as well. So this is something that was posted in our Discord, so I appreciate. I think it was one of our members posting, so thank you for that. And this is JP Morgan drawing up 6 possibilities for today. A 50 basis point hike and a dovish press conference, a 10 to 12% rally. Like a 10 to 12% rally. Like this is just insane. So it would be the most bullish outcome for equity investors, added the analyst that said JP Morgan's economists expect the Federal Reserve to hand out the 4th consecutive 75 basis point hike. And other outcomes are less likely, the firm's trading desk analyst basically mentioned, but a 50 basis points and a dovish press conference means a 10 to 12% rally. A 50 basis point hike and a hawkish press conference is a 4 to 5%. Then we got a 75 basis point hike and a dovish press conference, 2.5 to 3% rally. A 75 basis point hike and a hawkish press conference, down 1 to up to 0.5%. A 100 basis point hike and a dovish press conference, 4 to 5% drop, and a 100 basis point hike and a hawkish press conference, we got 6 to 8% drop, retesting year-to-date lows. So I think there's 4 scenarios in here that I can completely rule out right off the bat. And there's only going to be between 2 here. 50 basis point hike and a dovish press, I think that's going to be ruled out. 50 basis points hike and a hawkish press is also going to be ruled out because we're not going to get 50 basis points. I think 75 is pretty locked in. I think I'd be very shocked if Jerome Powell goes with like a 50 basis point hike. And then the other two that I think we can rule out is 100 basis points. I don't think that they're going to do 1 full percentage point because that, would really be substantial for the markets. So those four scenarios, in my opinion at least, I think we can rule out. It's going to be mostly between 75 basis points and whether the press conference where whether Jerome Powell is hawkish or dovish. That's what we have for the poll as well. So make sure that you do vote. But I think, right now it's pretty locked in. So if you come over to the Fed Watch tool, it's pretty locked in that we're going to see the 75 basis points. I think there's an over 80% probability for us to see a 75 basis point hike from the Federal Reserve, right? So over a 90% probability going into this meeting. So, these are the 6 scenarios that they laid out, but I think the first 2 and the last 2 are pretty rare or pretty, unlikely in my opinion. 75 is what's going to happen, and I think we're going to see whether they're dovish or hawkish in their tone of addressing inflation and of course the future guidance for interest rates as well. But yeah, let me know what you guys think as well. Chirag says I need that 10% rally on Amazon. Popular Lawyer says rate hike should be 75 basis points, but I wouldn't be surprised if they do 50. Let's just hope that the guidance for December is 50. Yeah, so I think that's what's really gonna come down to is December's guidance. And again, 2 p.m. is when that report comes out. So I'll be live to cover the report. And then the Fed chair's press conference is going to be super tight. It's going to be very tight. I'll definitely be live streaming it for the first 30 minutes from 2:30 p.m. to 3 p.m. But the last 15 minutes, because usually they last about 45 minutes to an hour, depending on how long the Q&A goes. I'll try my best to go as much as I can. The first 30 minutes definitely from 2 p.m. to 3 p.m. I'll be there. But after that, it's going to be really tight. So no promises beyond that, but I'll definitely be live streaming it for the most part. So this right here, the Fed meets again next week, November 2nd, and the market is pricing in a high probability, about 90% now, 75 basis points. And that would put us at roughly 3.75 to 4%. And if you take a look at the amount of rate hikes we're doing and where we're going to be by the end of today, we're going to be the same levels from back in January of 2008. This was another really interesting analysis. I did double check it, I think except for January, because January, I think we also had a Fed meeting. But in March, June, July, and May, we've seen the markets pretty much rally after Jerome Powell started talking, right? So on every single FOMC rate hike so far this year, markets have dumped at 2 p.m. Eastern when the rate hike came out in the report, and then rallied at 2:30 p.m. when Powell spoke. When Powell started talking, we've seen rallies, intraday. So lots of volatility here. This right here is going to be another really interesting sort of chart put together. So just like the implied, interest rates for the Federal Reserve over the next several years out. And you'll notice that right now we're on November 2nd. We're expected to get up to 3.75 to 4%. So that's going to be 3 hikes all packed in one, because one hike is 25 basis points, right? That's the normal hike. And what we're seeing is 75. So that's 3 hikes in one single meeting. And that's going to put us at 3.75 to 4%, so roughly 3.84% to be precise on November 2nd. And then you come over to December, we're going to see another 50 basis points. So that's going to put us to over 4.4%, and then possibly a 25 basis point hike over here. And that's going to put us to a 4.81%, and then almost at 5% in March, going into like May. But the expectation really is that after March and April, May, like that 3-month sort of timeline is when interest rates are going to be pausing, right? The Federal Reserve is going to start to pause back on their hikes, and that's when they're going to keep them at restrictive levels and then start to slow down, and then they start cutting rates, I think in November of next year. Yeah, so rate cuts are priced in for November of 2023. So about a year from now, at least that's what the market's pricing in. Of course, these expectations do change every day, depending on what's going on. But as it stands right now, they are expected to end somewhere around March, April, May, and then keep them steady entire year, and then start cutting in November of 23. So that's really the timeline for how interest rates are going to go over the next year. So another thing that's kind of getting overshadowed with the Federal Reserve and what's going on in the US is that there's also a meeting from the Bank of England tomorrow. So today we've got the Fed in the US, tomorrow we've got Bank of England in the UK, and they're also going to be raising rates by most in 33 years. So Bank of England looks set to raise the borrowing cost by most since 1989 next week, which is this week, and on Thursday for an 8th meeting in a row to tame inflation above 10%. So I know it's not going to be discussed as much because all eyes and all focus are going to be on the Federal Reserve, and we are going to focus on that as well. But this is also something that's coming up tomorrow, and it's going to be very important for the markets as well. So a little bit something that I also wanted to go over. So 4 things to watch the Bank of England's rate setting meeting. The first thing really is going to be, how much do we get that rate increase by? Whether it's 25, 50, 75, and what that terminal rate ends up looking like. And then, of course, the guidance is going to be very important, what ends up happening for December and going into 2023. And then some of the other things really are going to be quantitative tightening. So how much, how long is Bank of England is going to be doing this by. Another thing that I think will be overshadowed a little bit is ECB, so European Central Bank. Their interest rates are also expected to become effective starting today. So November 2nd, their interest rates are also going higher to over 2%, I think 2.5% effective today. So that's something that might also play a bigger role for the bond market either later today or of course later this week. So that's pretty much going to wrap up our pre-market expectations here. 75 basis points pretty much locked in, but really that tone of the Federal Reserve is what's going to drive the market. And right now we've got 71% of you guys expecting the Federal Reserve to be hawkish. So in other words, expecting, Jerome Powell to come out full swinging and be like, look, inflation's high, it's sticky, it's not coming down anytime soon, and we're going to keep raising rates until it's back under control, it's back down to our target. And that's very much a hawkish tone. If he doesn't mention anything about over-tightening or pausing or the fact that the economy is starting to kind of really slow down, I think that's going to be hawkish. If he once again mentions that, look, unemployment is really low and the economy can handle rate hikes, then that's hawkish, right? That just simply means that, look, they're not changing their course anytime soon, at least not for December or for February or for March of next year. So that's kind of where we are. Mason was asking me, what is your expectation of this poll? I don't know. It's with Jerome Powell, it's kind of like a hit or miss, man. Like you just don't know. Like he could sprinkle in some dovishness here and there, but I think it's overall like what's going to be that key takeaway from that entire press conference. I think that's what's really going to matter. It's hard to say. It's really difficult to predict what that tone's going to look like ahead of that meeting. But I think there has been some of the Federal Reserve members, presidents, they have been on both sides of the aisle saying that, look, we still need to raise rates. The terminal rate needs to go up to 4.5%, 5%. We need to get up to restrictive levels. And then you got some members talking about how we are over tightening or we're considering slowing down and pausing on rate hikes, right? Mary Daly mentioned markets ripped last week on that news. So it really depends on, what type of influence Jerome Powell gets under. And not to mention, speaking of influence, we've also got elections coming up, right? The midterm elections are going to be starting up here very soon. November's here. So if there's any influence coming from any of the political parties on Jerome Powell, that could also play a bigger role in that tone, in that press conference. So big day. Lots of money is going to be moved. I'm excited. Let's see here. Let's take a look at some of the comments. Silas says 2 p.m. will be like 5 a.m. here. Yep, so it's going to be brutal. I know it's not the best if you are obviously watching from different time zones and trading from different time zones. It's going to be tough. So Bass says it's going to be 75. It's going to be hawkish because he doesn't want people to be rich because they will spend even more. They want you to stop spending. Yeah, I mean, that's pretty much the idea, right? So on a theoretical basis, you're absolutely right. I mean, the reason why they're raising rates is because they want people to spend less and they want to lower demand. And that's one of the ways they actually do fight inflation. But I also think that monetary policy is a very, very one-sided, right? They have little to no control over the supply of things, but all they can really control is demand. And that ends up, in a very, very sort of challenging environment where they have to literally just put the economy in a recession in order to fight inflation, especially when we have high levels of inflation, right? Go back to 1980s and 70s, the great inflation, the economy had to go into a recession in order to quell the higher levels of inflation. So, there's no sort of focus on how we can raise supply or how we can increase productivity, increase supply in order to match that with the demand. But instead, all the focus is how we can reduce demand, right? Which I think, again, is very, very one-sided in my view. So Adam, do you think he'll be dovish because of the elections? Well, he really shouldn't be. I don't think he's going to get influenced all that easy, because he's mentioned that before, that monetary policy is very independent of making its own decisions. I don't think any political party can really influence what Jerome Powell has to say or do, or what the FOMC has to do or say. But you never know, right? With politics, you never know. So Kevin, did you see the letter that Democrats sent to Powell? Yes, I did. We talked about this, I think, in our last live stream. It was an interesting, obviously, letter, and we'll see how much of an impact that makes on Jerome Powell. We'll find out in a few hours. All right, let's see. With this inflation report, do you think it will hurt Tesla since they are reporting earnings soon? So they actually reported earnings literally just a few weeks ago. So they're not reporting earnings anytime soon. I think the next earnings is going to be in January, if I'm not mistaken. Let me just double check. So January 25th, 2023 is when the next earnings going to be. So they're not reporting earnings anytime soon because they just reported. But with respect to inflation, really what it comes down to is inflation's high. Federal Reserve is going to keep fighting it. They're obviously behind the curve, and they're going to keep fighting it. And as interest rates go higher, just the affordability for Teslas is not going to be that much, right? So auto loans are going to go up 5%, 6%, 7, 8, 9% in terms of interest. So lots of people are going to have to wait, or they're just going to pass up on the opportunity to own a Tesla because of the higher interest rates. And just a really, really tough environment. So, that's what happens when there is a recession, when there is sort of economic slowdown. Lots of people kind of pass up or just, forego the opportunities to spend today versus later, right? So you'll see, like, during recessionary times, people like to save more. They don't like to eat out. They don't spend. They don't pretty much do any of the things that they would be doing ordinarily in order to kind of prepare for a much challenging environment in the future. And that really just lowers earnings overall for most companies, right? Corporate earnings start to pull back. And that's what creates like lower valuations and sell-offs in the market as well. All right, let's see here. Okay, why is the job market strong? Nima, you want to rephrase that question? Why is the job market strong? Do you mean why is the job market so strong, or will the job market be strong? Like, what are you asking here? All right, comments on SoFi. So I will be doing a video on SoFi soon. I did a video on AMD today, but I will be going over to SoFi. Wow, so yesterday we did have a lot of selling pressure. So if you take a look at the red candle on a green day, that simply suggests there was a lot of profit taking, right? A lot of intraday selling for SoFi. Pretty much gapped up to as much as 650s, and intraday pretty much sold off over 11, almost 12%. So pretty substantial sell-off. But that being said, I will be doing an analysis on SoFi from a price to sales multiple standpoint. From that valuation metric, it does seem that it is trading at about fairly valued, or might be even considered undervalued, but that doesn't take into account the share dilution, doesn't take into account the earnings, the free cash flows. None of those things are taken into account. So it's a very, very sort of a not that specialized way of valuing companies, right? Price to sales multiple. But that being said, SoFi I do like very much, despite what other people might think. But I do appreciate SoFi's business model. I think they're growing, they're doing really, really well. But really $5 is going to be that support for SoFi, and I'll do a video on them very soon. Video on Airbnb would be very cool. I'll do that as well very soon. Let's see. Yeah, AMD's board approved a $6.8 billion share buyback, Kevin. Yes, so that's a big share buyback. I think that's one of the reasons why the stock might be going up to 5% today. And it's about time, right? They've been issuing a lot of shares. I think from last year we went from 1.2 billion to over 1.57 billion. So that they've obviously been issuing quite a bit of shares over the last few years, and it's about time. I think they authorized a little bit to buy back some of the shares here. So if you take a look at annually, this has been the share count. So we've gone from 1 billion to 1.17, 1.2, and then 1.2, and then 1.6, 1.57, give or take. So It's about time, right? They do it. And I'm actually very surprised for AMD to be at 5% because, like I said in my other video, if you would have told me that, look, Caddy, AMD missed earnings estimates, missed revenue estimates, also missed guidance estimates, and the margins also were not as great as before, I would have never guessed that AMD was at 5%. Well, this is a strange market, like this is what the market is all about. Even on those type of numbers, AMD stock is up 5%, and back over $62. So hey, I'll take it, but I was really not expecting the stock to be up this much. If anything, I would have just expected like a flat open, but hey, good thing it's up. All right, let's see here. So Oleg, I love it. Thanks for joining. No recession in 23 as strong jobs will increase GDP from 2.6. Technically, there is no time for meet 2 negative quarters in a row when economy data show true. No recession, bullish. Well, I don't know. I mean, there's just so many layoffs going on. So many companies are just kind of cutting cost when it comes to operating expenses. I think the unemployment number takes a lot of time. It's a very, very lagging indicator, right? It takes a lot of time to really start to show up before it just like takes off. So, we'll find out soon, what's going to happen. And another thing is really to focus a little bit on crude oil too. Like if oil prices keep going higher, we're back over $88 a barrel. In the month of November, again, it's up, a little bit over 2%. 4 consecutive months of sell-off we saw. In October, it's up over 8.4%. In November, it's up another 2.3%. That's just not good. That's not good. We're gonna get the inflation print, the CPI print on November 10th, so in about 8 days, and I'll do some updates and we'll go over our inflation tracking spreadsheet. I'll break that down, but crude oil prices are higher, so okay. Let's see. So, Caddy, is this an opportunity for generational wealth if a person just invests in index funds? Yeah, I mean, it really depends what your strategy is, but index funds have proven to be very, very successful. For several decades, and even for over 100 years, a person who simply dollar cost average index funds has come out on top. But really, once the numbers start to get bigger and bigger, and there's been several reports on this, several articles and blogs and whatnot, that the future returns are not going to be as high as what we've seen in the past. So I think moving forward, there is going to be a little bit of an element for very, very selective opportunities. What's worked out in the past may not work out as well. It might still work out, but not as well as what it has done in the past. So, from an inflation adjusted standpoint, the S&P 500 has returned a little bit over 6%, right? Which is still like achievable for the market in the future as earnings grow, as population grows, as more people come online, as more people become wealthier, as purchasing parity increases, like more people spend, everything's just going to keep growing. The markets are going to reflect that, but we're also living in a high inflation environment, right? 8% inflation in the US, 9%. In Europe, it's pretty high. It's in England, it's 10%. In India, it's pretty high, right? Asian countries. So the return for the S&P 500, the hurdle rate needs to be much higher. The market as a whole, it's difficult to get that. Individual stocks, it's much easier, right? So if you're a little bit more selective, I think the hurdle rate, the opportunities are much better for being more selective in individual stocks versus index funds, because in a high inflation environment, it becomes a little bit illogical to be invested in an index fund. But over time, the expectation is that inflation is going to come down, right? So if it does, then good. It's good for index funds. But if it doesn't, well, then on an inflation adjusted basis, really the return's not that much. All right, so someone says, if the Feds are hawkish today, can the market drop further this month, which would not match with the usual seasonality trend? Yes. So if the Fed is hawkish today, like we're talking like super hawkish, then yeah, I would expect the markets to sell off. This is after a 75 basis points. If there's any hint from the Federal Reserve, from Jerome Powell, that we're going to see another 75 in December, like if he just says this statement, like another unusually large interest rate hike could be appropriate at the next meeting. If he says that, well, that's it. Good luck. The markets are just going to not react well to that. But also looking at, some of the interesting charts that we went over earlier. like this, you know, every time the reports come out at 2 p.m., the markets have dropped and then they have recovered as Jerome Powell started talking. So, you know, maybe there's something about Jerome Powell that he's always been able to kind of soothe the markets here. Powerball is at 1.2 billion. Who's buying tickets? Is it really 1.2 billion again? God. Is that really that much, Kevin? $1.2 billion? So Mason, do we get a live stream from Caddy with the Jedi today at the Fed conference? So I will be doing a live stream at 2 p.m. Eastern. I'll come online at 1:45 p.m. Eastern. We'll break down the report together. We'll see what that rate hike's gonna look like. And then for the press conference, I'm definitely gonna be doing it for the first 30 minutes. And then I will try my best to still to the end, but time's gonna be super tight because I have to be somewhere. So yeah, I just gotta catch the train and just gotta be somewhere. So I'll try my best to finish the live stream because it's usually 45 minutes with the Q&A. But you know, with the timing is so tight, it'll be tough. But I'll definitely try to make it work. Okay, Nemo, why is the job market still strong? It's a great question. I think we're really, job market isn't like super strong, I would say. Short on the surface, from a number standpoint, it does seem strong. But if you think about, you know, how many companies we've heard from that are laying off people, right? So many companies. Like we've heard from, you know, I could easily count like at least 25 to 30 companies that I know of have in the US. These are big corporations, right? Have already mentioned they're laying people off. So it's gonna take time to kind of show that. Like it's gonna take some time for the unemployment rate to really start pushing higher. So on the surface, based on the numbers, sure, it's gonna seem like it's really strong, but I think in reality there's some weakness kind of brewing. I'm going to win. I will let you know, caddies, so we can move the market. Chenta says you guys are so strong. So wow, 1.2 billion is a lot. Powerball. I think that's the highest I've ever seen it go to. I don't think I've ever seen a Powerball go up like over 1.2 billion. Maybe 1.3, 1.4. But this was like back in 2015, like when I was there in the US. I think it was like 1.3, 1.4 billion. But that's about as high as I've ever seen it. I don't think I've ever seen it like 2 billion or higher. Usually somebody gets it, like at this point. All right, so let's see. All right, so let's take a look at DXY, so dollar index. So DXY looks like it's pushing higher. Well, not so much. It's at 111, so it's been pulling back, and that's good for the markets. You know, lower the dollar gets, better it is going to be for multinationals, because we've already seen from this earnings season, right, how much of a stronger US dollar has affected these companies from a revenue headwind standpoint. So many companies, like on a constant currency basis, grew, but once adjusted for the stronger dollar, didn't grow at all, or even declined on a year-over-year basis. So a stronger dollar is absolutely a no-go for a lot of these FANGs, because the higher the dollar is, the worse it is for their company earnings. All right, so let's see. Powerball all in on Tesla. So, Caddy, since you're in Europe, buy a Europe jackpot lottery ticket, test your luck. Yeah, I've actually seen those. There's a lot of kiosks over here. I've seen a lot of European lottery tickets, but I'm really not a huge fan of lottery. Like, yeah, just not really been a huge fan. Maybe like I've played like a couple times, but that's just for fun. Nothing like I do. All right, so sirens, yes, I've got my window open. Maybe that's why. There we go. Should be much better. All right, much better now. More quiet. All right, so we got 7 minutes left for the markets to open. Let's check out the poll. We got almost 400 votes, 72% people expecting the Federal Reserve and Jerome Powell to be hawkish today. And this is, again, considering that we had 75 basis points. So what we're going to do at 2 p.m. Eastern is simply come over to, All right, let me just show you guys. The Federal Reserve Open Market Committee, we're going to come over to monetary policy, meeting and calendars and information. And over here, right at 2 p.m. Eastern, I'm going to be live. I will be reloading this page to get that statement right there. You see that blank spot? That's where the statement's going to be released. We're going to click on the PDF. We're going to come down and first thing we're going to see is the target range and what that increase is going to be, right? So right now it's at 3 to 3.25%, right? What is that? 3 to 3.25. If we get a 75 basis point hike, that rate is going to get up to 3.75 to 4%. So once we load this at 2 p.m., we're going to look at this rate. If it's at 3.75 to 4%, so that's going to say 3.75 to 4%. That means we got a 75 basis point hike. If it's anything else, that means it's anything else. So that's going to be the first thing. And then I don't think we need to know anything about the bond buying program because that's already ended, of course, and they're already rolling over 95, close to $100 billion of MBS and US Treasuries every single month. They're supposed to, depending on what matures and when. But this is going to be the big thing. And then obviously we'll come back, take a look at the markets, and then wait for Jerome Powell. All right, so let's just quickly do our market poll, like the regular market poll. I'm going to end this one, and we'll see. This is going to be the more important one, though. Like the hawkish and the dovish, sure, that's great. But markets today, right? This is how are they going to end? Like, how are we going to see the markets close? Green, red, flat. I'm actually going to add a couple more options here. I'm going to add very green. You can only do 4. YouTube, come on. All right, we're just going to skip over flat. We're just going to do very green. We're going to do green, red, and then very red. Okay, so very green, green, red, very green. So we'll just do that. Skip over flat because, we don't need that. Kevin says purple. Love it. So yeah, make sure that you do vote. 4 minutes left for the markets to open. We do have volatility here, kind of climbing back higher a little bit. So VIX is up. What happened to my technicals here? Yeah, I don't know what happened to my technicals here. TradingView might just be glitching out a little bit. But anyway, we are coming down to 26, but we are up over 2% right now. So something that I also mentioned again, when the VIX is lower, it's time to really be looking out below. And whether we get a spike on the VIX, that's going to be more downside on the S&P and the NASDAQ. And right now we've seen literally just like 4, 5, 6, 7 straight candles, like red candles. And it's just dropped over 25, 26%. So something to pay attention to, obviously. Bitcoin's rolling over. Ethereum's just flat, 1,500 right now. Oil price has been higher. The 10-year yields are at 4%, just waiting what the Federal Reserve is going to do. And of course, a lot of individual stocks here not doing super well. Apple down 1.3%. Wow. Google had a brutal day yesterday, but flat on the open. AMD is up 5.6%, and then we got Tesla slightly down 0.75%. Oleg is saying a very, very green 10% as JP Morgan. Man, I love the optimism. I love it. It's great. Let's see. Do an analysis on Tesla, please. So Tesla right now, 226. Nothing really has changed. Again, there's not a lot of updates. Unfortunately, on Tesla, sure, from a company standpoint, there's things that we can look at, but support level really is going to be low 200s. We got a little bit of a bounce from that level for Tesla, and resistance is going to be in the 250s for the company right now. Just a few more percentage points really for Tesla, for Nvidia is what I'm looking for to kind of close out my puts. And then we'll just reopen new ones, CSPs. So yeah, Cybertruck launch, but from a technical fundamental standpoint, nothing really has changed from a few days ago. So that's where we are. Less than a minute for the big day, big day for the markets. I think guidance is going to be really important. I think 4% is a level we haven't seen in quite some time. So if you come over to the Fed funds rate, right? So if you take a look at where we're going to be at 4%, we are going to be as high as 2008, I believe. Or we'll just wait for this to load. But this is, again, going to be a level we haven't seen in almost 14 years, 15 years, when things really started to break down. Yes, so Tony, I do have a cash secured put on Google at 91, which actually should be in the money now. Yeah, it is actually $91 strike. We're literally like here, like around those levels, right? $91. I have a cash secured put, and we're literally at 91 bucks right now. So if it does expire, I think November, at the end of November is the expiration. If it does expire, then I'll end up owning around these levels. And of course, so here we go. Google is flat, just trading a little bit under $91 right now. We're gonna switch over to the NASDAQ, S&P, and the Dow. So NASDAQ here down 0.1%. So again, not a big move. Dow is down over 95 points, and the S&P is pulling back about 0.2%. So all three indices really are just kind of like flat right now. Not a lot of movement. We do have a big pump coming in for Apple. So almost back up to 150. And then we got Alphabet flat. AMD's also pulling back, still up 4.5% though, but definitely pulling back here a little bit. And Tesla's also down over 1.3%. So AMD's, Nvidia, some of the chip stocks are the ones that are pushing higher. Surprisingly so, like I said in my previous videos, very unusual for AMD to be higher on the misses that we saw. But the entire chip sector, semiconductors are up. Anywhere between 0.5% to as much as 4%. Lam Research and Intel are the only ones that are slightly down right now. All right. Yeah, GSK, I'll take a look at. Bass, I know that you've been talking about this, and that's great that you called out the exact bottom for the stock. That's awesome. And yes, I will be doing some analysis on that as well. Next week, I'm pretty much back on full schedule with updates and live streams analysis. And it's been a month-long travel, and it's finally coming to an end, which is what also making me a little bit sad. But hey, I had a really good time. So Gabriel, could the market go lower with your late year tax loss harvesting? That's a great question. That's actually something that we haven't considered. And considering the markets were so down in all of 2022, like I think it is possible that some people might end up taking losses on their stocks, right? They might end up realizing some of their losses in order to offset the gains or anything else, for the year. So I think that's a good question. I think there's some of the stocks that have already been beaten down and have been selling off. I think that could create some more selling pressure as more people kind of, towards the year end consider that tax loss harvesting. So I think it's a good point. That we haven't considered. It might not be substantial enough to actually like move the markets, but could be very selective, like to individual stocks and which ones have already been down so far for 2022. And just investors believe that, look, might as well just realize this loss, offset some of the gains, lower the tax bill, just move on, right? That could create a little bit of downward pressure for individual companies. Is Tesla going to make a comeback? Well, Jack is asking. So right now they're down 2%. So definitely selling off a little bit ahead of the Fed meeting, and so is AMD. So intraday we are seeing a pullback. But it all comes down to really what's going to happen in about 4 hours. Well, actually not 4 hours, but like 6 hours. When Jerome Powell starts talking and yeah, how the markets are going to react to what Jay Powell has to say, and what that report's going to look like. Yes, I do have a CSV on Tesla at the moment. I have a CSV down to 190 strike. It's been so back and forth. So many of the prices, this cash prices, strike prices that I've chosen have just been so like back and forth, like literally like have been at those levels. Like Google at 91, like below 91 right now. AMD has been so much back and forth around 60. It's unbelievable. Tesla came down to 190 almost. Like the lowest we saw for Tesla was 198, right? So we almost got in the money for Tesla. Nvidia is the only one that's still nowhere near close to 100. It actually came down to 107. And then it started to rally, right? It's just up a little bit over 28%. So yeah, pretty insane volatility here from the markets. Ooh, look at that. CRL, Charles River Laboratories, pushing up over 11% on a strong revenue and EPS beat. This is a company that we have analyzed in the past. I do like Charles River. Like if you take a look at their monthly chart, like this is nothing but a very, very strong, consistent uptrend. And then obviously sold off, I think 50%. Yeah, 65%. I've actually done a video on Charles River in the past. Check that out if you haven't already. Look at these revenue. Like look at the revenue and the income trend for the company. Right? This is beautiful. This is literally beautiful. Like this is what we look for when we're looking at consistent revenue earnings growth. And that's what Charles River has done. I think the balance sheet was also really good. Maybe not. Net debt's 2.71 billion. So they've got more debt than cash on the balance sheet. And the shares outstanding have also slightly gone up from 2015, but not a whole lot, only 4 million shares. So I think I did a complete analysis. I can't remember what the fair value was for this company, but a very nice move. 10% on a strong beat on EPS and revenue coming in today. Let's see. So let's just run through our watch list. How are Chinese stocks doing? I think NIO went through some production halts here. Still at 1%, so back over $9.80. Definitely incredibly oversold with the RSI and MACD where it is. Alibaba, $66 now. Lowest levels it's seen was $58. This is from, I believe, 2016, yeah. So I feel like Meta and Baba are like two of the companies that are just like, Meta is like the Baba of the United States, right, of the US. Alibaba is Alibaba and Meta is the Alibaba of the US. And it's just been selling off. And, you know, I feel like both of these companies are just like not realizing their potential in the market because of all the different external factors that they're dealing with. So, all right, Google is that cheap and lousy short stock, reminding me of the town certain service provider that everyone goes to for cheap, lousy service. Yeah, Robinhood is also releasing their earnings later today, so we're gonna pay attention to that as well. This is the entire earnings calendar. So we got Robinhood, we got Qualcomm. Qualcomm should be interesting. And that might move NVIDIA, AMD a little bit more on what their sort of guidance looks like. And then Fortinet. Fortinet actually I'm really looking forward to because this is a cybersecurity stock that I'm just not able to buy. Like it's just been trading at such high valuations that it's a company that I really want to own because of the stronger profitability, great revenue growth, cybersecurity sector that I have no exposure in that sector right now. But it's just the valuation has never come down. And that's true for all cyber companies. They've been trading at, 10, 12, 15, 20 times sales multiples for a long time, and they haven't really come down. So Okta, I did an analysis on Okta as well not too long ago. So make sure that you check that out. CrowdStrike, same story. 158, I think, still trading at a pretty expensive price sales multiple. Yeah, if chips run, so does SOXL. Let's take a look at where SOXL is at 9.25. So I have a cost basis of $9 for SOXL. We do have a trade idea on this company, not this company, but this ETF. Really, I mean, the whole idea is that given how low chips are, semiconductors as a whole, SMH, if you take a look at this ETF down, I think over 40%, 40% from all-time highs, at one point down 48%, trading at under 18 times earnings. and trading at a very critical moving average here, 200, 300 SMA, it makes for a good trade in my opinion on the long side. Depends very much whether the markets kind of collaborate or cooperate with us, the Nasdaq, S&P. If they continue to sell off, there's no way SMH is going to make new highs, but the risk reward is really compelling here at these levels from a fundamental technical standpoint. So I'm happy to kind of take a trade and then of course buy more if it dips down lower. Yeah, look up and share your Fortinet story again. Yeah, it's pretty crazy. Like when I looked up, it's like Fortinet right there. It's like, oh, this might be a sign. I've been meaning to buy this stock for a very long time, but just haven't been able to. Okay, let's see. So BHP, it's a potash miner in Canada. It's used to make fertilizers, seems to have high margins, and with the issues in Russia, it could be a play. Wow, that's a very interesting idea here. BHP. So okay, listed on the New York Stock Exchange, I'm assuming. Let's see. So yeah, it's got very good revenues. Last 3 years, good growth, high margins, good profitability, $22 billion. It's down 8.8%, pays a 13% yield. Oof, it's a pretty substantial dividend here. And it's got a good trend overall. I mean, it's got a nice uptrend. That's what we like to see. And, since 1983, the stock's probably up like 1,000,000%. 370, actually 37,000%. So yeah, not bad. Very, very good uptrend, higher highs, higher lows, good dividend yield, good revenue growth, good earnings growth. Let's see what we got for balance sheet. So yeah, negative net debt. So negative 1.1 billion. So they've got more cash than debt on the balance sheet. They have been issuing a lot of shares in the past. So if you take a look at their share count, it's actually gone up a lot from, well, it was declining a little bit from 2017, then 2018, 2019, 2020. It was going down and then immediately huge spike in 2021. And it's now pretty stable. So what I would be interested to know is, what they're planning to do. Are they actually planning to buy back shares, or are they planning to issue more shares? Because their cash flow is good. I mean, their free cash flow has been really, really strong over the last couple of years. 21 billion, 26 billion, it's substantial growth. It was declining for the last, 4 years before kind of spiking back up. So I would say like the last 3 years really have been pretty substantial for BHP in terms of growth. But yeah, the share count I think is something that I would need more guidance on. But so far, I think I like what I see, and I would definitely be looking into this more. This is a company that I can definitely analyze. So thanks for sharing this idea. Oh, my phone actually just died, so I don't have access to the chat right now. I can't see the chat. I'll just stroll in every once now and then, kind of see what you guys are talking about. Your target for SOXL, let's see. So I don't have a target specifically for SOXL, but I do have a target for SMH because that's what it's really tracking, right? So if you look at the underlying ETFs, that's what's really mattered for the leverage ETFs, right? Leverage ETFs have no demand or supply. Like it's not like an AMC that you can just buy a ton of SOXL and hope for the price to go up. Like it doesn't work that way, right? They're constructed in a very different way using lots of futures and derivatives and stuff like that. Because it's a derivative, right? It's deriving its value from an underlying index, which is the SMH. So I'm looking at SMH right now, and really the overall trend that I see is just this lower highs and lower lows. So if you do get this technical rally for the markets that we're waiting for, I mean, I'm really looking for 219s, 220s. For SMH, that's going to be an upside of close to 12, maybe 12.5%. And since SOXL is levered 3 times, that could be like 24 to 36% upside for this, and that's going to be roughly $12, $13 per share, theoretically, right? Because again, this rebalances every day, so it's not perfect 3 for 1, but that's kind of like the idea. All right. Is Meta buy right now? Well, Brandon, I think the biggest risk for Meta, unfortunately, right now is the sentiment, right? The sentiment is just so weak, and until that changes, nothing really matters. From a fundamental and technical analysis standpoint, I can sit here and tell you that, valuation's incredibly cheap. Technicals are very oversold, but that won't help you because sentiment is what's really driving the stock right now. And yeah, that's pretty much the biggest risk, right? So if the sentiment changes, great. If it doesn't, well, I'm prepared to see new lows. I'm consistently, like, we're pretty much seeing new 52-week lows for Meta pretty much every day. So sentiment's really weak for Meta at the moment. All right, so Nasdaq's down 37 basis points right now. We've got the S&P down about 40, and we got the Dow Jones dropping over 104 points at the moment. So we're seeing a little bit of a sell-off prior to the big numbers coming out. So AMD's up 6%, Calvin says, so pretty substantial move to the upside here. $63 is where it's trading at. Tesla's also making a recovery. And right now, Meta's the only one that's down 2%. Netflix is down 1.3%. So we're definitely seeing, lots of volatility here, of course, on a day like today. All right, everyone. So that's going to be it for this live stream. I will be live again at 1:45 p.m. Eastern. So, that's about 4 hours from now. I will be live again to cover that report. Again, we're going to go over to this report specifically. We'll talk a little bit about the press release. Again, this comes out at 2 p.m. Eastern for today. So we'll talk about the rate hike, and then we'll wait for Jerome Powell's speech, and that's what's going to move the market rest of today. So thank you so much for joining. I really, really appreciate it. And, be ready. Set your calendars for 2 p.m. Eastern. I will be live. I'll send an update over in our Discord for when we're going live. So thank you so much for joining. I really appreciate it. Make sure that you drop a like and, of course, subscribe to the channel. And the link to our Discord Patreon is going to be down below. If you're interested in joining, it's the first week of the month, the best time to join. So all the links are down below. As always, happy investing. I'll see you guys in a little bit.